I truly believe we are in a temporary bear market rebound. In the middle of a bear market. Where do I think stocks go? A lot lower than they are today. The bulls are back, baby. It's something that I keep seeing over and over. The number of people I hear saying, oh, thank God this bear market's over. We're back. 100% convinces me that we are not back. Mo, what do you think?
Even when bad news comes out, it's good news. And that to me tells me something.
Well,
That's
exactly.
a very telling story.
And we need to get to a point where good news is still bad news. So I've shown this chart before. This is like a generic chart. Now, really what ends up happening is it ends up going like this, okay? But we are in this period, something where everybody is coming back. So if you're new to the channel, I'm a value investor, but I'm not like other value investors that claim they are, but really aren't. I am cautious. Go watch any of our 2000 videos that we have on this channel going back 2 years. I was warning you about NEO, Nikola, all the hype stocks. I said, do not touch these. The market is overpriced. If you look at my stock market to GDP ratio, going back to 1929, as of this morning, it shows 70.1% overpriced. People that I respect still think that's really conservative. They're like, oh no, we think the S&P is worth 3,000. I disagree. And I think the future holds negative returns on the stock market for the next 10 or 12 years, not including dividends. So I believe that 10 or 12 years from now, the S&P 500 will be below where it's at today. Am I putting fear, uncertainty, and doubt in you? No. I just look at history, going back to 1929, and we are 70% over the historical value. To put that in perspective, the 2000 bubble, which a lot of people consider the worst ever, the worst we ever got was 57% overvalued. We're still higher than that, and we fell 20% last year.
And what's the worst we've gotten in this current bubble?
The worst, well, at one point we were like 58% recently, but I've been updating it.
As bad as it was 102%?
Actually, I have to update this to December now.
Okay.
So, guys, the future is not good. If you feel like, hey, this makes sense to you, subscribe to the channel. That's all I can ask you to do. I want you to recognize, though, that this video has no YouTube ads. We've started removing YouTube ads because we want you to focus on our content and our software. So, second thing, this made me LOL, like literally laugh out loud. This is a tweet I saw the other day. Rick Baumstein, more like Rick Dumbstein.
10 out of 10.
10 out of 10 joke. For those who weren't there, this is exactly what March 2009 felt like. It actually boils me inside reading this because he's a idiot. I was there in March 2009. I had friends calling me saying, I'm selling everything because stocks are going to zero. I'm not hearing that from any of my idiot friends who buy all the hype stocks out there. And for those friends out there who are watching, you probably don't watch my channel. Our friends don't watch our channel because they don't understand it. March 2009, let's look right here. Let's even look at valuations. March of 2009. We were 20% below, 36% undervalued.
Wow.
For us to be 36% undervalued right now, fair value on the S&P right now is 2,400. So for us to be 36% below value, it would have to be 2,392 times 0.64. 1,530. We're not even close. It doesn't even feel like it either. I remember hedge fund managers saying, I'm done. I'm not doing anything. I'm shutting up shop because I can't make money in this market.
For those who are wondering what happened in March 2009, after March 2009, this is when we kind of hit our stride and went to the highs that we're at now.
Yep.
With some hiccups on the way.
It's been a bull market since then, except for COVID and last year.
Yep. Guys,
when I read this tweet, I responded to it and I literally laughed. I just go, this is absolutely ridiculous. It's exactly what March 2009 felt like. The fact that you're writing this tells me it's not what March 2009. Literally, I had friends calling me saying, Paul, I'm selling everything because stocks are going to zero. And I was like, the U.S. economy would have to go to zero for stocks to go to zero.
Yeah, that's what that means.
And they still sold.
Literally what that means.
This is not at all like March 2009. Literally not at all. I truly believe we are in a temporary bear market rebound. In the middle of a bear market. Where do I think stocks go? A lot lower than they are today.
Yeah. And if you look at the trend of everything that's happening right now, we're still really catching that downtrend. This was from November of 2021. And you can see the trajectory. Now, everybody's getting excited because it kind of broke that little blip right there. It kind of broke that line. And that's where everybody's saying it's going. This is it. That was the bottom. We broke the trend.
And from a technical standpoint, it could be a breaking of the trend, but I still think the long-term trend for the market is going to be down.
Something that really gets me still is you don't have the institutional money flowing into the markets yet. That's what's going to take it.
So I disagree with you on that one. I think institutional money is the dumb money. I know you disagree with me on that one. And a lot of people
disagree.
By the way, 99% of people disagree with me. I think the people who run the big funds are the dumb money.
I don't care about dumb versus smart money. I just care about institutional versus retail. And I don't think institutional money is moving in.
Yeah, but I'm not going to, for me,
I don't care about the wording.
Well, but for me to see a bottom in the market, I want to see people telling me, Paul, you say you're a value investor and these stocks keep going down. That's what I want to hear. That's what it would take for that to happen. For the next minute, I'm going to explain to you our software at everythingmoney.com and how you can use it to retire with more money than you thought possible. Do you get anxious every single time the market dips? Do you feel like maybe you're behind on your savings? Is it ever a worry that you may not have enough money to retire? If you've answered yes to any of these questions, then our software is absolutely perfect for you. With these easy-to-use tools and our community with thousands of other like-minded investors in there, you can use all of this to have better peace of mind and to understand why you are making the decisions you're making, because it's more about the emotion and temperament than it is about the numbers. And these tools, especially this community, will help you realize that and make better decisions going forward. You will absolutely be able to understand financial statements and impress your friends who still waste their money buying stocks based on their emotions and other hype people out there. So for a little over $1 per day, less than a cup of coffee, eliminate that fear from your life of worrying about your future financial state and your retirement savings, and try our software risk-free for 30 days. If you don't like it, email us, money back guarantee, no questions asked. Go to everythingmoney.com, sign up now, and change your financial future starting today.
This is the quote-unquote dumb money versus smart money, institutional versus, you notice, I think that institutional money has not given up, but slowed down. You need the average person now to start giving up on it. And when they're both down here, that's when you get the big pullback.
Fair enough.
That's what I'm thinking.
I'd want to see that chart.
Yeah.
Going back to 2000.
It's a good idea. I'll pull that one out.
Can you pull that up?
No, I can't do it right now. Somebody sent me this.
By the way, look what it says at the top.
Yeah, dumb money and smart money. So smart money is this blue line, and dumb money is allegedly the retail investor.
I literally believe smart money is less than 0.1% of the population. That's the hard part. And that's when I sit there and say, for us to really be in a new bull market, we need the average investor to give up. The Peter Lynch cocktail party story. Yeah. If I go to a cocktail party and people feel bad for me for what I do for a living because I'm a money manager, I should be buying stocks. If people are indifferent, stocks are probably where they should be. If people are telling me what to buy, I should be selling stocks. People are still telling me what to buy. There's still average people in the street saying, oh, I loaded up on this, I loaded up on that. That can't happen. Yeah. We need people to emphatically give up. We still see money inflowing into ARK investments.
That's when you know that that's a really good indicator, actually.
Listen, I look at all the inflows. I'm like, think about it, guys. In order to beat the market, you have to think differently. So if everybody agrees with you, it's not going to work. It's just, you're not going to be able to, and that's, in order to get outsized returns, we have to get to the point where the masses are saying stocks are where you don't want to be.
Yeah.
And that's not the case right now. Now, is it easy for me? Yeah, because I used to be in your shoes. I used to be like, wait a second. No, come on. And then over time, and I saw a couple bear markets going, no, that is really true. Mm-hmm. And so it takes some time. Trust me when I say, if you watch 4 or 5 more of our videos, you will have a better understanding of money. It does take time. I literally have friends, multi-millionaires who disagree with me. Absolutely. And their money is managed by these idiot wealth management firms who they think beat the market, and they don't. They do terrible, terrible investing. They don't even understand what investing is. So when it comes to Rick Dumstein, for those who weren't there, this is exactly what I literally saw this tweet and I was like, I think I wrote back with, is this a joke? I can't believe this. I literally can't believe that somebody. No, I can't believe it. And by the way, if you want to follow my other annoying tweets, at Paul Gabriel, same on Instagram. I just look at this going, this guy is an idiot. It doesn't, it shows me how short financial memory is. That was 14 years ago now. And he said, this is what it felt like. We weren't there. It's like, wow. And you know what? All these kids are going to believe him because you weren't there.
No.
You weren't paying attention because you were 12 years old.
And the amazing thing is you look at the picture of him, like he wasn't 18, 21 years old going through that. He was an adult in the middle of his career going through that, and he still believes that.
Listen, I remember I belonged to a club back then. I was playing golf. And I was partnered one day with a guy, and he was a Merrill Lynch financial advisor. And he said something. I'm like, oh, so how's life? He's like, well, apart from work, it's pretty good. I'm like, what do you do for work? He's like, I manage money. And I'm like, and I remember thinking to myself, like, shouldn't you want markets to go down? That's really told me like, oh my God, even those financial advisors are dumb. They don't get it. They don't get it. So guys, going back to this sounds scary, and I'm not doing it to make you feel scared. I'm just telling you it's reality. This goes back to 1929, stock market to GDP ratio, which Warren Buffett says at any given time is the single most accurate indicator of where we stand in the market. And look at it. It's no coincidence. Go back to 1944. Undervalued? Look at returns, 9% a year, not including dividends. Go to overvalued. As you get more red, the returns go lower. Look, we're at 30% overvalued here, 3.6%. It's just, that's the way it is. Go to 1982, the low of the stock market. The lowest it got, negative 64.7%. Not including dividends, the market did 14.1% a year for the next 10 years. It just makes sense. The more you pay, the less you earn. The less you pay, the more you earn. That's it. That's purely it. It's not a coincidence. And this has a 0.81 correlation coefficient. That is strong correlation to market returns. It just makes sense. If I told you to buy this iPhone and sell it for $1,000, do you make more money if you buy it for $1,000 or less money if you buy it for $1,000? Do you make more money if you pay me $100 for it or less money? It just makes sense. So guys, there will be a time on this channel when I'm telling everybody you should be buying stocks for the long run. And guess what's going to happen? People are going to tell me, you're wrong, Paul. Stocks keep going down. And that's the hard part about being a value investor. You're always considered wrong. Because when stocks are sky high and irrational, you're saying don't buy. And when stocks are falling and won't stop falling, you're saying to buy. Either way, you're always going to look wrong. And I'm okay with that. Because in the long run, these methods work. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?